there is a potential ballot question that was just announced that would bring down the state income tax from 5 to 4%. Now, before we talk about that, Massachusetts is, the moniker of Taxachusetts. Well over 20 years ago, there was a group of great taxpayer advocates from the group called Citizens for Limited Taxation. And they advocated and they pushed to bring down the state income tax, which was supposed to be temporary for I think over 10 years. It was like 6.25%, I think. And they wanted to bring it down to 5%. And it took a long time. It took over 20 years for that to happen. But they're the ones that were advocating for a low tax, kind of similar to the situation we have now where we have very high tax. It's having a big impact on the state. Now we're here today because there's a group of people who are putting a ballot question, myself included, that will try to lower the income tax from 5 to 4% and from the top from 9 to 8. So what would that mean for Massachusetts?
Well, it would mean firstly that you belatedly join a lot of other states in at least, I'm not going to say cutting taxes because it would still be much higher than you were at the start of this period. So since 2021, we've had 28 states reduce the rate of an individual income tax, and 26 of them have a lower top marginal rate now than they did in 2021. That's a lot of states. I mean, not every state has an individual income tax. So of the 41 states that have a wage income tax, 26 of them have a lower top rate now. And then you have, unfortunately, Massachusetts that's gone in the other direction. So the opportunity to at least partially roll that back to reduce across the board 1%. So you have now a 4% base rate that would be essentially, we don't call it brackets and raising brackets here because it's a surtax, but functionally it's a 2-bracket tax code. So 4% for most people, and then 8% above $1 million. That at least I think is progress. It's still a high tax rate. It's still among the highest in the country, but it is lower. It joins the majority of states in trying to do something to provide tax relief. And it does it in a way that does, because it's focused on the marginal rates, does help the economic competitiveness. I think there's ways to go even beyond that, but it's really a move in the right direction to be thinking about how can you do rate reductions. And it's important to put this in context too. Every state, including Massachusetts, has vastly higher tax revenues, even after adjusting for inflation, than they did 3 years ago, 5 years ago, 8 years ago. Now, 2023 was kind of the peak for most states, and it's flatlined a little. So you'll hear like, oh, we're trivially below, maybe where we were a year ago or 2 years ago. A lot of states say that. And then you look and say, but you're so massively above where you were 5 years ago. States saw huge increases in revenue. The Tax Cuts and Jobs Act in 2017 broadened tax bases that helped Massachusetts and other states. The Wayfair decision increased the amount of sales tax you could collect. Just broad economic growth has increased collections, lots of different things. Inflation, you don't really want inflation to do this, but inflation has meant prices are higher, sales tax collects more. So Massachusetts, like just about every state, is collecting way more in taxes than it did in previous years. Obviously the millionaire's tax, the surtax has also dramatically increased that. I think it provides some capacity to think about how do we provide at least some relief.
Yeah, and that relief, so let's just talk about the average person, may not be impacted by the millionaire's tax, but definitely indirectly. They may work for a company who can't grow as much because of that tax, or they may feel that when they sell their home. But this income tax reduction, if you earn $50,000 a year, that's $500 back in your pocket. You earn $100,000 a year, that's $1,000 back in your pocket. So it's real savings, it's real money for real people. And it means everyone in the state. As a tax policy, do you like that concept, that everyone benefits from this?
Yeah, it's broad-based. It is a 1 percentage point reduction for everyone. And I think that's the right way to go here. I would never have added the surtax. I like the flat tax that Massachusetts used to have, but the idea of providing relief for everyone, reducing that rate, I think that's good policy, and I think it provides real benefits for all taxpayers.
So for Massachusetts taxpayers, it means we all get a little bit more. We get a little bit less taken out from our paychecks, a little bit more in our pocket. I want to talk about another ballot question that is being proposed today too. It's a little kind of complicated, but it's called Chapter 62F. It's basically when the state collects too much tax revenue taxpayers get a refund?
Yeah, so this is in a broad class of what we call TELs, or tax and expenditure limitations. Lots of states have them. They don't tend to do a whole lot in most states. And that's true, honestly, in Massachusetts, where it's only been triggered, I believe, twice, in 1987 and most recently in 2022. It rarely, therefore, provides a credit or a refund. What it does at minimum, though, is provide sort of an upper limit. It constrains the state, constrains the growth of taxes, because if it grows too fast, you will have to return some of it. So I think that has been valuable. It's certainly valuable when it provides that refund, but even when it doesn't, it just constrains the growth of taxes overall in the state, because otherwise, if you raise them too much, it will trigger this, because it's based on wages and income, and those sort of economic factors, not on taxes in previous years. And what happened, of course, as you know, is that the surtax is outside of that. Just about everything else is in. Your traditional individual income tax, your corporate income tax, your sales tax, your excise taxes, your estate tax. Like, they are all part of this, but the new surtax revenue is outside of this. So however much it generates and all of the increases it's created, it doesn't affect the cap. It doesn't provide a refund or a rebate. I don't think that makes sense. If you're going to have this, it needs to be pretty much all of your tax revenue.
You don't want a loophole.
You don't. Loophole. You don't. If you're generating additional revenue, then presumably if it's growing faster than the economy, substantially faster. I mean, this is not a strict tell. This is not something that is creating lots and lots of refunds and rebates every year. I think in the last year, you would have needed more than 7% growth in a year for this to trigger. That seems reasonable to me. And this is outside of it. I think it makes sense to have the whole tax code within it.
Yeah, well, hopefully it get triggered much more frequently once the voters approve this.
The Fiscal Alliance Foundation is a nonpartisan, nonprofit 501c3 organization. Visit our website to read more about our alternative energy policy studies, sign up for important email updates, make a tax-deductible contribution, and follow us on social media.